Recessions might spell disaster for most, but for the wealthy, it's often a time of unparalleled opportunity. While unemployment rises and businesses close, the rich find ways to expand their wealth. Today, we'll explore 10 ways the rich benefit from a recession, revealing the strategies that keep their fortunes growing even in tough times. Number 10. Buying assets at lower prices. During recessions, when the economy isn't doing so well, things like houses, stocks, and businesses become cheaper. This means that rich people who already have a lot of money can buy these things for less than they normally would. Imagine going to a store when everything is on sale. It's like that, but with big stuff like buildings and companies. Some famous rich people, like Warren Buffett, did this during the 2008 financial crisis. They used their money to buy things when they were cheaper, and then when the economy got better, they could sell them for more money. So while most people are worried about their money during a recession, the rich are taking advantage of the low prices to make even more money in the long run. Number 9. Increased bargaining power. When the economy is not doing well, people who sell things and provide services might be struggling. This means they might be more willing to give discounts or better deals to people who have money. Rich people can use this to their advantage. They can negotiate better prices for things like fancy items, services, or even when hiring workers. Imagine if you were the only one with money at a yard sale. You could probably get some really good deals because the sellers really want to make a sale. It's kind of like that during a recession, but on a bigger scale. So while most people might have to pay full price or even more during tough times, the rich can use their bargaining power to save money and get better deals. Number 8. Access to cheap credit. Banks and other financial companies might try to encourage people to borrow money by offering loans with low interest rates during a recession. This is because when people borrow money and spend it, it can help boost the economy. Rich people, who are seen as trustworthy by banks because they have a lot of money, can take advantage of these low-interest loans. They can borrow money at these low rates and then use it to invest in things that they think will make them even more money in the future. It's like getting a loan for a really good price and then using it to make more money. So while some people might struggle to get loans during tough times, the rich can use their good credit to access cheap credit and make profitable investments. Number 7. Government policies and bailouts. During tough economic times, governments try to help out by making new rules and offering financial aid. However, sometimes these rules end up helping rich people more than others. For example, during a recession, governments might give tax breaks, which means rich people pay less in taxes. They might also give bailouts, which is money given to big companies to help them stay afloat. These big companies are usually owned by rich people, so they benefit the most. While these policies are meant to help everyone, they often end up giving more help to those who are already wealthy. There have been many examples of this in recent recessions, where the rich got richer because of government actions meant to help everyone. Number 6. Stock market volatility. When the economy is going through a rough patch, the stock market can get really shaky. This means that the prices of stocks go up and down a lot, which is called volatility. But experienced investors who know how to handle these ups and downs can actually make a lot of money during this time. They might do things like short selling, which is when they bet that a stock will go down in price, or options trading, where they make deals based on the future price of a stock. These might sound complicated, but basically they're just different ways to make money from the stock market's ups and downs. And there are plenty of examples of investors who've made big profits by using these strategies during tough economic times. Number 5. Mergers and acquisitions. During a recession, when companies are struggling to stay afloat, some of them might end up in a really bad financial situation. These companies become like targets for other companies or rich individuals who are looking to expand their businesses. So what happens is that these wealthy folks can swoop in and buy these struggling companies for much less than they're actually worth. It's like getting a big discount on something valuable. This helps them grow their own businesses or investment portfolios by adding more companies to their collection. And there are lots of real-life examples of this happening during recessions, where big companies or rich individuals take advantage of the tough times to scoop up bargains and make themselves even richer in the process. Number 4. Real estate opportunities. Some people might struggle to pay their mortgages when the economy isn't doing well, which can lead to foreclosures. This means that banks take back the houses from people who can't afford to pay for them anymore. As a result, there are more houses available for sale, and because fewer people are buying, the prices of houses go down. This is where the rich come in. They have the money to buy these houses at lower prices, knowing that eventually, when the economy gets better, the value of the houses will go up again. It's like buying something on sale and then selling it for more later on. So while most people might be worried about losing their homes during a recession, the rich are taking advantage of the lower prices to make smart investments that will pay off in the long run. Number 3. Job market exploitation. During recession hits, a lot of people might find themselves out of work because companies aren't doing so well and they need to cut costs. This means that there are more people looking for jobs than there are jobs available, which creates what we call a surplus of skilled labor. Now, here's where the rich come in. Since they own businesses or have the money to invest in them, they can take advantage of this surplus of skilled workers by hiring them at lower wages than they might normally have to pay. It's like getting a really good deal on hiring talented people. This helps the rich business owners save money on their operating costs, which means they can make more profit both during the recession and even after things start to get better. So while many people struggle to find work during tough economic times, the rich can use their position to benefit from the surplus of skilled labor. Number 2. Entrepreneurship and innovation. When the economy isn't doing so well, it can create new problems and gaps in the market that need solving. This is where entrepreneurs come in. They're people who start new businesses or come up with innovative solutions to problems. Now, the rich have an advantage here because they have the money to invest in these new ventures. They can take risks and support innovative startups that might not have the resources otherwise. For example, think of someone who invents a new app to help people find jobs during a recession. The rich can provide the funding needed to get that idea off the ground. And there are plenty of examples of successful companies that were founded during recessions, like Airbnb and Uber. So while economic downturns can be tough for most people, the rich can use their resources to fuel entrepreneurship and innovation, creating new opportunities for themselves and others. Number 1. Wealth preservation and growth strategies. The rich have some tricks up their sleeves to protect and even grow their money when times get tough. They use different strategies to make sure they don't lose everything during an economic downturn. One common strategy is called diversification, which means spreading their money out across different types of investments. They might also put their money into things like hedge funds or alternative investments, which are a bit different from regular stocks and bonds. These strategies help them reduce the risk of losing all their money if one investment doesn't do well. And they often get advice from financial experts who specialize in helping rich people manage their money during tough times. These experts can give them tips on how to adjust their investments and financial plans to weather the storm and come out even stronger on the other side. Understanding how the wealthy benefit during recessions gives us a glimpse into their financial playbook. If you found this video helpful, please hit the like button, subscribe, and share your thoughts in the comments. We'd love to hear how you plan to prepare for the next economic downturn.